Hi guys, I'm Phil Town from Rule 1 Investing. Today, I want to tell you how rich you'd be if you followed Warren Buffett's stock market strategy. Hey guys, before we get into this topic today, I just wanted to remind you all that I have a giveaway going right now, celebrating the fact that I recently hit 100,000 YouTube subscribers. I'll be giving away a bunch of prizes, including a full ride scholarship to my 3-day workshop in Atlanta, Georgia. Just click on the link in the description for the contest details and to enter. Anybody who knows me for more than 2 seconds knows Warren Buffett has made a huge impact on me and on my financial investing strategy. Heck, I even named my business rule number 1 after one of his quotes. The quote goes, rule number 1 is don't lose money. Rule number 2 is don't forget rule number 1. So this is a rule I live by as an investor and also as an educator of financial investing. I've built my business, my personal wealth around it. Everything I do is all about minimizing my risk, maximizing reward. I like, as Monesh Pabrai said, I like to buy free lottery tickets. That's kind of Warren Buffett's style. Like Buffett, I know the stock market doesn't have to be a big gamble. To me, his investing philosophy is really brilliant because it's so simple. It basically says, don't lose money, ever. Now that philosophy has made him one of the richest people on the planet, and he is also one of the most successful investors of all time. And one of the best ways to get a feel for just how extraordinary Buffett's investing results have been is to look at how much money you could have made if you'd invested just in Buffett's holding company at the right time. Now, the holding company's name is Berkshire Hathaway. So here's a fun little thought. So what would $1,000 invested in Berkshire in 1964 be worth today? I hope you're sitting down. Warren Buffett first took over this holding company, Berkshire Hathaway, in 1964, and at the time, the shares were priced at $19 a share. Now, the company was originally a textile company, but Buffett could see that textiles were all moving overseas, and he basically just used it as a holding company to flow cash that he could invest in other companies. With Warren Buffett at the helm choosing which companies Berkshire invested in, the number on the price tag of this stock rose dramatically. Today, those same Class A shares of Berkshire are valued at just a little over $300,000 a share. Now what that means is that your $1,000 invested in Berkshire back when he took it over in 1964 would be worth $16 million today. $16 million! If you had invested $1,000 a year in Berkshire, starting in 1964, your returns would be even more staggering. Today, $1,000 a year invested in Berkshire from 1964 to now, that's a total investment over a lifetime of $54,000 put away, and you would currently have $124 million. That's awesome. Many of today's investors obviously weren't even alive in 1964 when Berkshire Hathaway was taken over by Buffett, or they weren't old enough to have money in the market or whatever, these excuses are. But thanks to Buffett's investment strategy, that doesn't matter. $1,000 invested in Berkshire Hathaway in 1990, that'd be worth $45,000 today. So that equates to an investor multiplying their money by 45 times in less than 20 years. That's pretty darn good. So what allows Buffett to deliver such incredibly high returns? The returns that Buffett has been able to deliver aren't the result of an accident. The investing success boils down to a strategy for choosing the right companies to buy, as well as when to buy them. Now, Buffett is among I guess you could say almost a cult of investors that believes the price that the market puts on a company is often much less than the company's true value. And Warren has made a fortune out of finding companies that are priced lower than what they actually should be. He's not a day trader, certainly. He's not even an active trader, but rather he focuses on buying companies he can hold on to for the long term by waiting patiently until he can buy them on sale. In fact, one of Warren Buffett's most famous quotes is, "Our favorite holding period is forever." Buffett's also said, if you aren't comfortable holding on to a company for at least 10 years, then you shouldn't even buy it for 10 minutes. Using these relatively simple principles, Warren has been able to single out companies that deliver value over the long term, and that's the key, and buy them at a price point that's on sale relative to their true worth. The result of the strategy is seen from how much money an investor could have made if they followed Buffett, and those results speak for themselves. Now, critically, there's only 4 things that Buffett really focuses on when it's time to buy a company, and there's just like no magical secret about it. He's been, talking about these principles for 50 years. He used these same principles to turn a holding company priced at $19 into something worth over $300,000 a share. Those principles are time-honored. They go all the way back to Ben Graham in the 1930s, who taught Buffett how to invest. They're simple to learn, and anyone can use these in their own investing strategy. The principles are really awesome. I'm going to run through all 4 of them really quickly. I hope you're sitting down fast and got a pencil. It's number 1, be capable of understanding the business that you're getting into. That would make sense. Number 2, be sure it is a competitive business. It has a durable intrinsic characteristic that protects it from competition. Number 3, make sure the management has integrity and talent. And number 4, buy it on sale. So with rule number 1, investing, a strategy that's designed to enable everyday investors to learn what I just taught you right there, to make use of those same principles that Buffett's used over the course of his 60-year career, you're going to be able to achieve returns that greatly outpace the market, just as Buffett has. And it's real simple. I mean, you can't even argue with it, even though a lot of people would like to, because if you can buy $10 bills for $5, you're going to make money. And that's what we do. Today, Berkshire Hathaway is reaching critical mass. Generating returns like it once did is going to be really difficult for the company due to the limitations of size, of having to invest billions of dollars. But having said that, just following the strategies of Rule 1 investing, you can still emulate the past success of Buffett and Hathaway in your own investments. That's the exciting part of this. You can do it. Now, I'd love to hear from you. Do you want to learn how to invest like Warren Buffett? Do you think you can? Or is he some special genius that only he can do this stuff? Leave a comment below with your answer and I'll be sure to follow up with you. And thanks for watching, you guys. Now go play. So you guys, if you enjoyed this video and feel it was valuable in teaching you more about investing like Warren Buffett, hit the like button and please share the video with your friends. And if you want more investing content about those 4 principles, subscribe to my channel. We talk a lot about them. Don't forget to click the button on the screen for a free gift, and thanks again for watching.